listen, there's a chance we could break above this 28,700 level. The problem is upside is limited to about 30,000 to 30,500. The markets are going to go lower. The Fed has now told us they're keeping interest rates up for longer.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin and Ethereum. He believes that we could possibly see Bitcoin's low in the coming months. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed. Before listening to him, please ensure to smash the like button and subscribe to the channel.
This is a weird week because we don't have a lot of price action due to economic news. There is a little bit here and there, but we're not talking big inflationary numbers. We're also not talking about Federal Reserve commentary or decisions. So it's a little bit of what I would refer to as a hangover week. A hangover week means that basically you're in a situation where there's a lot of action the previous week and everyone is basically, they were drunk on action, right? I mean, it's essentially, that's the kind of analogy where this week we're like, okay, there's not a lot of action. And what you can see is you can see the price action. It's slower. This week, the bank stocks aren't going crazy. The volume on the S&P is quiet. Even crypto, I mean, a little bit of a pop today, which we're going to talk about in just 1 second, but even crypto's been a little bit quiet for the last few days or so. So again, that's what we call a hangover week when people are kind of calm and a little bit less agitated. All right, so bottom line is here, let's go into some charts. I want to start with the crypto charts because I know everyone's waiting for those. We want to look at that. It's actually one of the few things out there that's moving big today. So what I'm going to do is I'm going to flip us into the crypto chart. This is the Bitcoin chart. We are having a nice pop on Bitcoin today. Bitcoin trading up about 4.4% on the morning session, almost $1,200 from this time yesterday. Now, one thing to note here, take a look. Basically, what we're looking at is a level of support right here, right? So it's just very defined, and this is the beauty of charts. It kind of guides you to support and resistance. Notice how the lows right through here are all together at this 26,700 level. That's a very obvious support level. Notice how the highs right here are all at the 28,700 level. That's resistance. Look at the high of today. It was close to 28,700 on Bitcoin. So what this is telling me, and number one, where do I get that resistance from, by the way, because this is just cool stuff. But look at this low pivot here from the bull market dip in 2021. It is exactly at that price point, 28,700. So essentially what we're looking at here is that becomes resistance. That's why price is having so much trouble getting through this level. All right, so again, that is your level to watch. Now, again, what we're doing here is we're playing pinball. All right, meaning you're bouncing here, you're hitting off here, you're pulling back, you're going back and forth. And essentially what that tells us is that the more we hit one way, the weaker it becomes. So the more we hit to the upside, there is a chance that we could break up. I've said that for a while. I said, listen, there's a chance we could break above this 28,700 level. The problem is upside is limited to about 30,000 to 30,500. Again, that takes us back to this major consolidation area right here, as well as all of this over here. Even pre-bull market run up to 60,000, where we then pulled back, or 65, then we went to 69 and pulled back. That's that area right in there. All right, so again, the way I'm viewing this, the way I'm trading this, I have a tiny position short Bitcoin at 28,450. I will be adding to that at 30,000 Pierce, essentially. That puts me in a position to be short close to the 30,000 level. If we get above 30,000 and we stay there for a certain amount of time, like a time count, then I cover my shorts. All right, so this is a very calculated trade with a specific risk to the trade, right? And that's what it's all about, folks, is that in general, we want to know what's our end game. When does our thesis fail? And that's what we're doing in this chart. That's how I'm analyzing this chart. All right, next up, let's take a look at Ethereum. Now, Ethereum is kind of interesting here because you're in this upsloping channel, and it's a great upsloping channel. You connect these lows, that's exactly where we hit right over here. You go from these highs, and it goes right on that same incline. Notice the blue lines are parallel. All right, so what this tells us is this is a lot of resistance right here around this 1,850 level. All right, if 1850 does break, and if we get above here, there's a run up to 2,000. Now, why is 2,000 very key? All right, the reason 2,000 is key on Ethereum is because it was the highest point right here since the lowest point was put in on Ethereum back in June of 2022. So again, the lowest point was put in June of 2022. The highest point since then was in August of 2022. That's again the upside potential. That's where Ethereum will meet resistance. Would I be a shorter there? I would. The reason I would be a shorter there is because I'm the type of trader that makes a level break. Otherwise, if it doesn't break and it's resistance, then the probabilities are dictating a pullback. So it's all about probabilities. There's no, oh, I'm always bearish. There's no, oh, I'm always bullish. There's none of that BS in this chart or in any charts that I look at. It's about specific levels. And as soon as you understand that, you become free. You become free to understand that, again, it's all about the odds. You become the casino. You are no longer the gambler. And that's what it is. It doesn't mean I win on every trade. Heck, I put out a video yesterday. I lost 99% on SBNY because the Fed halted it. The government halted that stock. I was in that stock at the time. And it basically opened yesterday at I think I sold it at 58 cents. So again, I lost 99% of that trade. I'm not perfect. No one is. But the key is, how much did I have invested in that trade? 1% of my portfolio. If you had $100,000 yesterday, you would have had 99,000. In addition, we closed out an Alibaba trade, 3.6% of our portfolio. Boom, we made back almost 50% of that loss right there. So it's all about position sizing. For those of you that are new out there and you guys are focused in and thinking to yourself, oh, okay, think about this, right? You know, I have to make $1 million overnight, or I have to make it by the end of this year. That's the mentality that will make you go broke. Always remember that, guys. It's singles and doubles. You want to get to the Hall of Fame as an investor hitting singles and doubles. You know why? Because ultimately to hit home runs means you're going to strike out. And when you strike out in trading, that means you lose a big amount of money. And that is unacceptable. That kills your account. It basically puts you back to the starting point, and it is not good for your overall health and your financial wealth. All right, so let's get back into the charts here. I want to go over some other charts. Let's take a look at gold. Gold today is pulling back just a little bit. Let's take a look right here at gold. Gold's pulling back. Now, gold's had a great run. There's nothing to take away from gold here. You guys know I continue to be a huge bull on gold. But we are short-term extended here. We might need to consolidate a little bit more. After consolidation, is gold going higher? Absolutely. You're looking at a double top coming up. That's your next target at 2075. So essentially what I would say to you, or what I'm saying to myself, is that I am buying pullbacks. If we get a pullback in gold, I'm a buyer of gold. The chart is an amazing bullish. Look at this sideways bullish consolidation for the last 2+ years, the last 3 years. That is amazing. Last year in 2022, everyone was like, oh, you know, gold is coming down here. It's not performing like Gareth said. By the way, it still beat the S&P and Bitcoin by a mile. But the key was, look at the dollar. The dollar was up 20%. 20% on the dollar, and gold was down for the year maybe 5%. That tells you huge accumulation. In fact, I did interviews where I said, guys, when the dollar is up 20% and gold doesn't decline by 20%, it tells you big money is buying. Don't be a fool. Follow the big money. There's a reason why big money is big money. It's because they know what the heck they're doing. And so ultimately, that's the key. And now we see this big move up this year. Look for it to attack 2075. My target for the end of this year is well north of 2075. Should be, again, potentially $2,300. Once we break out above 2075, that's your play. Look to buy miners on pullbacks. The miners will do really well this year because inflation is coming down. Last year, inflation was 9%. And you know what sucked for the miners? The fact that we saw inflation high and gold price was not going up. So they were basically making the same or less on selling their gold that they were mining, but all their costs were up precipitously. That was a bad recipe. That's why the miners underperformed. When I go to the mall or when I go to the store, am I like, oh, look at that. Milk's price this month is up 20%. Let me buy 10 gallons of milk because it's up 20%. Heck no. What do? I say, you know what? I'll buy a gallon. My family drinks a little bit of milk. I'll wait till next month or next week when price comes down. All right, you don't buy more of it. You don't rush in. You don't go panic buy milk. Or what about those pair of jeans, right? What about the pair of jeans that last week were $100? This week they're $500. Are you going to really go out and be like, hey, and now I got to buy those $500 pair of jeans? No, yet for some reason in investing and trading, this is what people do. They literally say, wow, the price is going up. I got to go in and pay more for it. That mentality is a broken mentality. As soon as we can fix our minds, get our minds right, that's where we can actually focus in and make money in the markets. All right, let's finalize on the S&P 500 here, guys. We got to look at the S&P here. The S&P 500, if we look at this chart here, in fact, let's go to the spiders. That's the one I have annotated a little bit more. This is what we're looking at on the S&P. Down-sloping trend line. Let's see if we break above it today. If we break above it, S&P has short-term upside to the 413 level. All right, 413 level is this high pivot to this high pivot. That would be significant resistance. What would drive the S&P to the upside? Frankly, probably the banks. The banks have been beaten down so much that if that ended up, if the banks really caught a bid, if the regionals caught a bid, then I think you see the S&P trade up, okay? So again, that would be a reason why maybe we break up to that level. On the other hand, if we break to the downside, you have this upsloping line and then this support here. If we ever get below this 375, watch out. We're going to retest the October 22 lows. Now, let's be clear on this, guys. I'm going to be extra super clear here. The markets are going to go lower. The Fed has now told us they're keeping interest rates up for longer. All right, meaning into 2024, we're going to see interest rates here. The market doesn't believe them. That's why valuations in stocks are still ludicrous. At some point, we are going to go into a recession because of high interest rates. At that point, valuations, remember, when we go into a recession, people feel the crunch. They don't spend as much money. They don't travel as much. They don't buy as much. So that means that earnings per share for most of the stocks out there will drop. That means valuations will drop.